So is gold's long run over? Patrick Chidley, a mining analyst at Barnard Mellet, says no. He joins us now from Stamford, giving us his perspective and metals-related stock picks. Patrick, always good to see you.
Hi.
Hi. Okay, so gold remains lower today, but well off the worst levels of the session. That seemed to turn around as the Fed chairman was speaking. Among the highlighted quotes, significant headwinds remain to U.S. growth. Is that what you would point your finger to for the regain, if you will, in gold prices today?
Oh, yes, I think so. I think there's a definite direct relationship between his comments and what happened in gold earlier on today.
So then what's your overall outlook in gold? Is this just a hiccup? Will it continue its bullish run?
Well, I think it's a hiccup, but I think we are getting towards the end of the year now, and I think the people have made money in gold, and I think there's some reluctance to hold maybe, and maybe some people a little bit skittish. For example, what we saw last week, obviously, with unemployment maybe looking to turn around and the economy looking to start up again, and therefore people looking forward to perhaps higher rates. But I think this morning Mr. Bernanke has scotched that particular issue in the short term here.
And then what do you think of Stephen Roach's comments that there's a bear case for so many of the currencies out there, so the best place to be is gold? That's got to work into your outlook.
Yeah, no, definitely. We've been of this view for quite some time that gold, the prices will rise in all currencies. There's a lot of currencies out there also with problems, just the same as we have in the States here. And those moving from one currency to the other, I don't think in the end is going to save you from devaluation, which I think is on its way. And obviously that in another word is inflation.
So then what's the best way to invest in gold to take advantage?
Well, we like the gold stocks give you very good leverage. Gold producers are just beginning to produce some really, really strong earnings. We have a forecast for gold next year just about $1,200 an ounce, and at that sort of price we see many of the gold stocks that we cover generating very strong earnings, and probably some of the strongest earnings you'll see amongst industrial companies and well, the market in general. So
is it best to stick with the gold, the GLD ETF, for example, some of the mining names?
Well, I think it depends on really what your risk tolerance is and what you're comfortable investing in. Obviously, the ETF gives you exposure directly to bullion, but when you invest in the stocks or in mutual funds that invest in stocks, then you'll get the benefit of the leverage that those stocks carry when gold prices rise and they're able to generate more earnings and more value.
So it seems to me that you're saying $1,200 is a bit of a resistance level for gold?
No, I don't mean to say that. I really mean to say that we're pretty conservative on gold right now. I think 1,200 would be an average, but I wouldn't be surprised to see gold really spiking, well north of 1,200 next year. Obviously there is some expectation that in the short term the economy will improve, rates will have to go up, and that will be, I think, a sort of a short-term to medium-term issue for gold, but it won't deter long-term buyers who are going to be buying because they want to protect their wealth against the inflation that's coming, and it could be a couple of years out, that event. But so gold could go up a lot higher in the sort of medium term.
Can we rest easy, though, that you're not talking about a bubble? Gold prices aren't bubbling?
No, indeed. I think if gold prices move down, really only $100 an ounce, you're getting into the sort of levels where, given the way the costs have moved up in recent years, you're getting towards the area, the sort of zone where you're going to see mines closing again in places like South Africa, for example. So it's quite a the costs have gone up a lot if you throw in capital costs as well.
Patrick, we're going to lose our connection with you. Thank you so much for joining us.
Thank
Patrick Chidley of Barnard Mellet.